A balance sheet is also known as a statement of financial position and is a very simple thing to read and interpret. Why? Because it only has three components. So I'm going to use my color-coded balance sheet here to explain to you how a balance sheet works. So as you can see, the three components are your assets, your liabilities, and your equity. And you'll see the assets sit in a blue block, while the liabilities and equity sit in a red block. Why? Because the blue block always has to be in balance with the red block. Balance sheet, always in balance, right? The assets always have to be equal to the liabilities plus the equity. So I'm going to explain what I mean through an example. Let's say you buy a car, and the car has a value of 100,000. So we would call that your asset. Your car is your asset. How did you fund your car? So you funded it with some borrowings. We would call that your liabilities. And let's say 80,000 borrowings. So I'm going to move this all the way down here so you can see a liability of 80,000. Where's the difference from? You would have had to put in your own hard-earned savings. So we would say in accounting that you have equity in this car to the tune of 20,000. So just to recap, 100,000 car funded, 80,000 by liabilities, 20,000 by equity. We see you're in balance. That would be your balance sheet, assuming you had only one asset, the car. Let's look at how a company balance sheet would work. What are the assets that a company would have? Land and buildings, equipment, bank accounts, stock, vehicles. Those would be the assets of a company funded by lenders, loans, borrowings. Those would be your liabilities. And the difference funded by the owners of the company, those are the shareholders, right? So equity in a company setting is your shareholders. So you've got your assets funded by liabilities and equity. It might be that your assets are funded by a whole lot of liabilities, so mainly through lenders and only a little bit through shareholders, or the other way around, where your assets are funded only a little bit by liabilities and the majority by shareholders. That is it. That is a balance sheet, simply telling us at year end, at a point in time, what is the financial position of the company, what we have, that's our assets, that's the blue block, and where we got the funds to have what we have, that's our red block, either from borrowings or from shareholders.